Grand Rising. So I want to come on here real quick and reiterate to y'all about the red list situation. So if you guys haven't taken the time to do this, now would be the time to do this. It's Friday. All right, we got class on Sunday. Um, Prepare for Monday. Prepare for next week, and prepare for the rest of your life. All right. What you need to do is you need to pick out a group of stocks that are on the decline. Okay. You need to have those on your radar so that you can benefit from when it comes back. To me, when I see big dips like this, there's no difference between this big dip and the COVID-19 dip. Okay, there's no difference between the big dip and the COVID-19 dip. All right, the COVID-19 dip gave you an opportunity to buy stocks at a discount and benefit on the way up. What you need to do is you need to find stocks that are at a discount that have a high price projection. Okay? If the projection is higher than where it's at right now, you need to have them on your radar so you can track them and get in at the right time for long term holds. I'm not talking about day trading. I'm not talking about getting in and getting out in 48 hours or a week. I'm talking about buying in and holding these positions for a month or 2 months if you have to. We're talking about a large amount of growth, a high percentage of growth. It's March. We only 3 months into the year. Okay? It's 9 more months for the rest of the year. All right. So you got a potential to get into something now and hold it for the whole remaining 2021 and get a large amount of return on your money. So I got Tesla on my list. I got Netflix on my list. All right. And you see I got support and resistance marked up. I got my trend line down and price targets. All right. Support and resistance. All right. Trend line if something fits and price targets. Peloton. All right. You see they all look the same. They all look the same. Tesla, it looks exactly the same. Netflix, it looks exactly the same. Apple looks exactly the same. Peloton, it looks exactly the same. Costco, it looks the same. PayPal, it looks the same. Alibaba, it looks the same. SMH, just the semiconductor ETF. There's a dip. There's a formation. There's a chart pattern. Here's the target. All right. Walmart, it looks the same. Okay. They're all looking the same. Now you see this formation. You see this dip, and then a small a little a little bounce off of support, and then another little a M shape type situation or N shape type situation. You see that it's very very familiar. This formation, they all look the same. All these stocks look the same, guys. They're all bouncing off of support, trying to figure out a way to get back up in price. So you look at the formation here, and then go back to the dip, the COVID dip, and look at the formation there. Boom, drop, and then a little N shape. Same thing. It's the same formation. You just gotta go back and look at rewind time. Rewind time if you can. All right. You gotta go back and rewind time and look at how the stocks look. Look at how the stocks are formatted, what the format is, and what formation you see when it rebounds. All right. You need to look at what the rebound looks like. Okay. Every time a stock pulls back, how does it recover? What does it look like when it recovers from a big pullback? You have to go back and take your time and look. You can't track every stock, but you can establish a list for stocks that you are watching. And then you have to set your price targets, and then you have to set your entry triggers. Okay? I gave you a few triggers to check out. The 20 moving average. All right? When price crosses over the 20 moving average, that's a good entry signal for you, depending on the formation and depending on where support and resistance is at. Let's say, for instance, you want to get into a stock and you're anticipating the 20 moving average, price crossing 20 moving average, but then you got resistance right here. Well, that might not be a good spot. You know what I'm saying? That might be a quick a quick trade for you to hold for like a day or two, but you might not want to you might not want to hold that long term because you see all this resistance up here. You feel me? But a better one might be maybe after it busts through resistance and then goes through the 50 moving average and then makes its way up to the 200. Now you more confident in holding it long term. Like, you have to set these parameters for yourself. All right. So when I said make a red list, I don't mean for you to just make a watch list of stocks that you like. I mean make a list of stocks that are on sale, that are at a deep discount, that look like they're about to recover. How do I know that they're about to recover? Because there's some type of support area down here that it bounced off of, okay? And then price is trying to work its way up higher, and you can see the formation, and you see how price might come up and test the 50 moving average and come back down again. Then it might jump up and cross over the 50 moving average. Once it crosses over, then you know that you're getting ready for a recovery. All right. The reason why we stay on these big time frames is because the big time frames allow us to be patient. Price moves slower on the big time frame. All right. If I go to the daily time frame, one candle is 1 day. You feel me? Look how the candles aren't that big. You know what I'm saying? Yes, the price movement might be big within the day, but the candles themselves aren't that big. You feel me? When you see an upward movement like this, yes, it's an upward movement, but look how many days it took to get up here. Every candle was 1 day. So when you're on a big time frame, you can give yourself patience. You know what I'm saying? You got support line here, and you see how price bounce off of support, and now you got the 200 moving average on the daily. All right, how's price going to respond to this 200 moving average? Is it going to continue to go up? Well, once price cross over the 20 moving average on the daily chart, I know that I'm probably looking in for a buy. That's what I'm waiting for. I'm waiting for price to cross over the 20 moving average on the daily chart for every single one of the stocks on my red list. All right. Once price crosses over the 20 moving average, I'm probably going to be able to look in for a buy position if there isn't resistance in my way. You see, price crossed over the 20 moving average on the daily chart for Alibaba, but there's resistance here. So you saw it broke out, and now price is starting to come back. It's trying to decide if it has enough steam to get up out of here. All right. So by the end of the day, we'll see if Alibaba is ready to rebound. If Alibaba closes outside of this consolidation zone, then I'm going to get into Alibaba for a long position. It's not that much. It's not that difficult. Now, you have to convince yourself by doing further research and looking into the company, figuring out what's going on, figuring out what's the regulatory stuff going on in China with Alibaba, all that stuff. You have to do the research and figure out if that is something that's going to be sustainable in the future. But it really just starts out with, your technical analysis and figuring out where your price target is. I need to put my price target on here. I put my price target on here. It's going to be somewhere up here. All right. So this is what you need to do. Go put your watch list together, your red list. All right. And put your alerts on. If you don't know how to do your alerts, the simple thing for you to do, you click on the candle and you see the dots on the candle. You right click it. You right click the candles. All right. Add alert. I don't know if you have the this capability on your version of TradingView or not, but if you have the updated or upgraded version, you can right click. All right. Then you can go and put an alert condition 20 price. SMH, that's the price. Crossing 20 moving average. Boom. Open-ended so that it doesn't close. There's no expiration time on this. Open-ended. Notify on app, notify in email. You can notify through text, email, SMS, whatever you got to do. Set your sound so you hear it when it goes off. You can name the alert and then hit create. All right. So now you got an alert set for SMH. When it crosses over the 20 moving average, I'm going to get alerted. Then I can go back to my chart and look and see if I'm ready to get in for a buy position. All right. Same thing for every single one of these stocks. They're all in a position to where they're on a deep discount. You need to set your alerts and be ready for when they turn around so that you can hold them for the long term and grow your portfolio easy. All right? Let me know if you got any questions.